Right, welcome guys to this short analysis that I'm gonna do in regards to EURGBP. Yes, this is an asset that we never look at, but for learning purposes we are going to analyze this pair and we are going to be following it and see how the market structure goes. So I did ask in the group this afternoon regarding this pair to say, what can you see on a monthly chart? I'm gonna try to make this video as short as possible, preferably not more than 5 or 10 minutes. So I did ask on the group, like, what you see when you open the monthly chart for the euro against the pound on a monthly chart. What do you see? Yes, some of the guys, they replied, but the majority, well, I guess people are busy at work, they couldn't get to the chart. Up to now they couldn't get to the chart. So yeah, I've decided, okay, let me do a short analysis of the euro against the pound. Right, first things first, we are on our monthly chart, right? This is a pair that we have never looked at, so the levels that we have to define, we don't know where they are, so we have to first define the levels that we need to talk about. And if you remember correctly, I shared with you guys a trick when you're analyzing a pair for the first time, or if you haven't analyzed it in a long time. I've shared with you guys like how you can be in a position to easily identify the levels to look out for. So this is what we're gonna do. Right now we are on our EURGBP monthly chart. Now I'm going to switch to a line graph. Remember this, guys, those in the mentorship, you remember what I'm talking about. Now we need to focus on the peaks and the valleys. Let's focus on the peaks and the valleys. We are going to be highlighting those peaks, right? So first things first, we've got a valley here coming right here, coming in at 70147. That's the first valley that we have to mark out, right? Then next we've got this guy here. As you can see, I have chosen a time frame that's starting from, let's say, 2016. The lowest point, which comes in around November 2015. That is the one that I have marked out first, which I think is a much better time frame to start looking at price action from. Yes, some they can look as far as back as 2007, but for me that data is now a bit redundant. Things have changed. So now next we've got this low here, right? Can you see we've got that low, and then we come to this short-term high here that was formed here. Then we've got this high. Now once we have done that, take note of the price zone. Take note of the price zone that you are working with. What do I mean by this? I mean these price levels here. You see, first we've got the 70147, then we have the 76838, then we've got the 840, 64, then we've got the 8972, then we've got the 9209. Right? Now, once you've done that, you're good now to switch back to your normal candlestick chart. Now we're gonna do that. Let's switch back. As you can see, you can clearly see now the levels that we have been highlighting on the line chart. But take note, the wicks, or the tails as some prefer to call it, they overlap. You see, the wicks are overlapping our peaks and our valleys. What does this mean? That's retail money, guys. It's of no significance to market structure. That's retail's liquidity. That's the money that the institutions will hunt for. The candlestick, the body of the candle mainly represents institutional pricing. Take note of that. The body of the candle represents institutional pricing. Okay, so now that we've highlighted our zones, what can we read from that? Right, in terms of recent price action, we've got this order block here, this bullish order block. Price dipped down here. We've got a bullish order block. So as you can see, our valley came in exactly at where that candle closed. That bullish order block here, that was where the valley came in. Remember when I was marking on the line chart, when it closed, it rallied, creating a new level of demand, right? A new level of demand, of which we haven't yet come back. Right now, when it does that, when it did that, it broke this structure here. That's why we saw market rallying to the upside, to the previous highs that we saw in 2008 and 2010. Now, once market did that, what happened next? Right, price dropped down from those highs. You see, there was a rejection in higher prices. We closed down and we came back into the 840 zone. What is the significance of the 840 zone? Right, what is the significance? There you have it. That zone, that's a pivot zone. Price gets always attracted to that zone. That is a pivot point on our market structure. So we're gonna have to take note of that. That pivot point is very crucial. So now price did dip back into the pivot point, right? Here, price dipped in, and then the buyers, they came back again, they pushed price further up, right? To where? To the 2007, 2010 highs. You see, so we can literally say that Euro Pound has been in an uptrend from 2015 all the way to November 2017. It was in an uptrend. But then what happened after that? Market started ranging. You see, there was a range. Market was just playing in the range. You can see we've got this range here. Of course, there's a lot of opportunities there if we dig down to a smaller time frame, right? So now, from that range, market has been crippling, going back to the highs again, and the supply zone came into control. Market crept in again, supply zone took over, market dipped down to the downside, right? So now we are back this bullish order block that comes in at our pivot zone. So this order block has been tested like 2 times now, right? So we had price rallying away, came back. This is a test of this order block, guys. You see, take note of the body of the candle. It was dipped into. You see this candle here. This candle dipped into this body of the order block, almost 50% of the body. That was a test of that block, and then price rallied away. Bullish order flow, price rallied to the upside. Now it came back again, second time, right? But this time now, take note of this candle with the long wick. It cleared up these equal lows, right? It cleared them up and then rallied back to the upside. That price action is crucial. Liquidity was cleared here, right? Signifying that long liquidity has been engineered in the market. If we go back to the basics of institutional order flow, long liquidity has been engineered. But the last time they engineered long liquidity, they managed to push price back up. Now my question is, how come we don't see January pushing back up, right? So probably this stop hand, this liquidity engineering which happened here, has exhausted all the liquidity. Now there is a change in structure here. You see, supply zone is in control of the market, right? Big moves happening going to the downside, right? If this engineering liquidity was of genuine essence to the market, this candle here, the January candle, should have been up here by now. Yes, I'm not saying it cannot. Probably by close by Friday it can be a bullish candle, but that's so highly unlikely, right? Unless if there's like crazy fundamentals that happened. So my outlook on euro pound is still bearish. I'm still expecting weakness coming in on the euro pound, you see, but the close of January is going to be important, it's going to be crucial to this setup, right? The close of January, which is coming in on Friday, is going to be crucial to this bearish setup. The reason why I'm saying I'm bearish on euro pound is because right now large moves are happening going to the downside. You see, we've had large moves going to the downside, and then there was a bullish pullback here and then another pullback here, but supply zone, this zone here, is in control of the market. That supply zone is in control of the market. Now I'm just gonna draw the supply zone so that we can go to a lower time frame, right? Can you see the highs that I marked out on the line graph? These highs, see that range? That's our supply zone, right? Now I'm going to mark out a demand zone here, right? Let me mark out a demand zone which comes in on this block here. You see that demand zone was spiked, but it was not engulfed yet. It hasn't been engulfed, but price is playing in that zone. Now when we look at this chart, we ask ourselves, where is the market likely going to rally to look for liquidity? Now in this case, market is mostly likely to, let me switch back to the chart that I shared in the group. Market is likely going to rally to these points that I've marked here. We've got sell stops here, right? This is our monthly demand zone. We've got the monthly demand zone here and a supply zone here. Don't get confused, guys. This is the chart that I just shared in the group when I asked you the question about what you think. Now, when we look at these levels that I've highlighted, right? Market supply zone is in control of the market. Sell stops here have been cleared. You see? The sell stops below this low here, they were cleared here, meaning there's now more sell stops have been absorbed here, right? Level might not hold. Take note. Buy stops were cleared prior to this drop, right? Buy stops were cleared. Sell stops have been cleared. So we can literally say that both sides of the market have been worked out. Now, where's the next closest area of liquidity that the market can go to? Down here. You see, which is in this zone here, which is our monthly demand zone. So I can see market coming down here, which is also being supported by this void here. You see this bullish candle here, this void. If you remember correctly, the USD Japanese yen, the USD JPY trade that I gave you guys, not really gave you, the one I said let's look at USD JPY in our last meeting before Christmas. We had the same setup on USD JPY where we had liquidity void that eventually got closed up. So I'm expecting EURGBP to dip down into the 7780 demand zone. I'm really forecasting, that's my outlook, you see, because now this pivot point here, the fact that we are already price is already playing under our pivot zone means something is not really in line with the current price. Because if this bullish order block was supposed to hold the price, we should have been seeing higher prices. So euro pound is still bearish, but now from which levels now that we're expecting more bearishness coming in on euro pound? Okay, so let's go down to a weekly time frame. Now here we are on a weekly time frame, right? Now we've got this demand zone, right? But these lows here, price is still playing down. Okay, let me highlight that thing and say which low are we talking about. We've got these lows here, right? Look at the body of the candles. That is the most important thing when we're doing our higher time frame analysis. So we've got there, the low is coming in, the close is coming in at around 84977, right? I'm gonna round that to an institutional price level of 85 there. So now 0.85, that is an ideal area to look for short trades. Some might say, 85 looking for short trades, but we are leaving a demand zone. Yes, reason being here, the sell stops were cleared here. Yes, market did rally, right? Engineering long liquidity, it did rally, but it didn't go anywhere. It came back into a new supply zone that is created here, right? Market didn't go anywhere. So this supply zone here, see this bearish order block, has held the price. That's why you can see there's a whole lot of wicks there. Let me highlight that. We've got a whole lot of wicks signifying taking profits. This order block here. Remember guys, an order block is just a new level of demand or a new level of supply. If it's a bearish order block, it means it's a new level of supply. If it's a bullish order block, it's a new level of demand. So let me put tomato there. Right, that's our new level of supply, which was created here during a downtrend. See, where's the next? There's the next level of supply. After that, where's the next? There's our next level of supply. You see, the base in the market in the direction of the momentum. So now I'm expecting price to push back, to correct back into the supply zone, or the moment it tests 0.85, then I'm expecting further drop, like a massive drop all the way, right, all the way to these sell stops here and fill up the fair value gap, which is our void. So now that we've highlighted that it's supply, let me go to a daily time frame. Right, now you can clearly see what I'm talking about, right? Big moves happening, going way to the downside, right? Let me zoom out so that you can see clearly. You see, big moves happening. We've got the highest movements in pips going to the downside, and we have correct downside, then we have a correction, and we are still in that correction. So I'm really expecting 0.85 to be tested before a very strong push to the downside. Right, now looking at the fundamental side of which fundamental can really affect this pair to move that much. Friday guys, Brexit, the last date for Brexit, 31 January, remember, official date. They want to leave the EU. That could be the catalyst, right? I'm not saying that is what is going to happen, but as an institutional trader, I have to look forward to those type of fundamentals and then come up with the concrete analysis of a pair. That's why I chose this pair for you guys to see, okay, this is what we are going to be looking out for. So now you can clearly see, okay, 0.85 price zone, which comes in also between 0.84, 700. It's in this area, guys. This area, see this area, that's the area you need to be looking out for short entries to the downside. You see, expecting price to dip into those price zone before we crash to the downside, right? It can go either way, but this is the most logical analysis that I can give you guys in regards to the EURGBP pair. So I'm expecting further bullish evidence on this asset. So now this is what I'm gonna do. I've already recorded almost 24 minutes now, which is what I wasn't expecting to do. So now let's go. We put our pending order. We go sell limit, right? We need to 8. I'm gonna go 84700. That is my entry price, right? And my stop loss, I'm gonna put it at 85120. 85120. That's my stop loss. And my first take profit, I'm gonna put it at 83,100, right? And then I'm gonna place the pending order. So you can clearly see there I've got a sell limit, which I'm hoping is gonna get triggered. But now, due to once it gets triggered, I'm gonna start monitoring the trade to see how it's behaving, because that stop loss range could be a bit small, as I'm forecasting a whole lot of volatility coming in on the EURGBP in the coming days. But for now, I'm going to leave that order in place, and then we'll see how it goes. So that's pretty much about it, guys. This is what I was expecting you to at least answer when I asked, what are we really looking out for? What is it that you can see on a monthly chart? That is exactly what I was, of course not exactly the same thing. Yeah, it's not gonna make sense if I'm looking for the same exact thing, but more or less of this type of analysis of a pair. Remember, we don't use indicators, we use pure price action, institutional supply and demand. So you can see the way I have decrypted this pair, I didn't use any indicator, I just linked a fundamental to the analysis. Remember, fundamentals always fulfill what the technical side of the asset is showing you. So yes, guys, that's much about it for today, and I'm gonna try my best to be giving out this type of analysis on a 1 or 2 daily basis. Yeah, it's gonna be difficult for me to be doing this like every day, you know how it is, guys. So yeah, I hope this has been insightful to you guys, and I wish you guys happy trading, and here's to more pips. Thank you.